A different story in Europe, closed the day flat. Exchanges are in an increasingly fierce competition for new business, a topic familiar to my new guest, the chief executive of Six Group, which runs the stock markets in Switzerland and Spain. Some of the initiatives include courting Chinese business, green bonds, a market aimed entirely at startups. Jos Dijsselhof is with me now, joins me from Zurich. Sir, very good to see you. I'm grateful. What's interesting is the market, and particularly the Swiss market, having been restricted to a certain extent with access to Europe, the EU, having to find these new areas and really plumping down with China. How successful has it been?
Well, first of all, we are right in the middle of Europe. We indeed do have some discussions with Europe about being equivalent. We are, from a market rules and regulations, completely equivalent with Europe, but there is a political element there. But in itself, the Swiss market is a very powerful market. Of course, the Swiss finance industry is strong. The country has a very strong currency. If you look at inflation, interest rates, it's probably one of the countries that's doing better in this difficult environment than many others. And the China business that you are referring to is just a very small part of our business. We've been working with the Chinese stock exchanges in Shenzhen and Shanghai for 7-8 years already to create an opportunity for Chinese companies to list GDRs here in Switzerland and also the other way around. Right. And that has just been come to fruition last year.
But I was particularly interested in the GDR because I mean, it doesn't matter about the technicalities as far as viewers are concerned as such. But if you think about the way the US for overseas did ADRs, which of course has became so incredibly successful and a backbone in many ways of issuance into the US, could GDRs be that in the future? And you're basically ahead of the game.
Well, we think it can be substantial. Of course, the Chinese market is really big. Many of the companies that are actually listing in Switzerland, GDRs, are not even that familiar or known in the rest of the world, but they are of size. We've had more than $3 billion raised last year, 1.2 billion so far this year. So I think we have a head start. We have the right conditions, and we are operating in a country, Switzerland, that has good collaborative engagements with China. So I think we're in pole position there.
And as an exchange, I mean, I think back to when I started in this business, and you know the exchanges were all very sleepy, and then all along came into the online trading, and then the platforms, and this, that, and the other. Where do you see positioning for the future? I mean, with Spain and with Switzerland, do you need to grow acquisition-wise as well as organically, do you think?
Well, first of all, I think diversification is really important. So we have, as you mentioned, the stock exchanges in Spain and in Switzerland, but we also have a post-trade business, so clearing, settlement, custody, which is of similar size as the exchange business. Our third business unit is our data business, which is becoming more and more important. It's also the fastest growing business. And then we also have a local Swiss payments business. So we have a very diversified portfolio, which is very different than in the past. Exchanges were exchanges. So diversification is important, and of course size is important. So we're growing our business continuously. We grew first half of the year by 4%, 4.4% if you equal out foreign exchange. But we need to continue to grow. This is if you want to be in the top of the industry, you need to also be of size to be able to make the investments required. So it is a fierce competition, including size.
I was interested in what you were saying at the beginning about exchange equivalence and the EU regulations, which of course was at the heart of so much of the Brexit discussions with the UK. Now Switzerland is slightly different. It has its 16 treaties or whatever it is, which makes it a far closer one. But the protectionism of the union really knows no bounds when it comes to financial services.
Yeah, I think you cannot compare the Swiss and the UK situation. The UK situation was a divorce. And between Switzerland and the EU, there's always been like a partnership agreement, which is still in place very much. So I think it's starting from a very different position. But I think in essence, the EU is trying to protect their business, doing what they think makes sense. But I think it's important within Europe that the UK EU, Switzerland, that we also collaborate, because in the end, we're not competing with each other, but we're competing also very much with the rest of the world. So I would be more in favor of more collaboration and less polarization within Europe. But the EU has, I think, on the back of Brexit, taken a bit more aggressive stance in their regulations, and we've been on the receiving end of that for sure.
A true diplomat, sir. I'm grateful for your time this evening. Thank you.